Turnkey Property Pros, the Investor Playbook. This podcast was created as an extension of the conversations we have with investors every day. People who are trying to make thoughtful, long-term decisions about real estate investing and want to understand how all this actually works. Over the course of this season, we're going to walk through how we think about real estate investing, strategy, markets, planning, financing, risk, execution, particularly in the context of turnkey rentals, and not from a hype or sales perspective, but from an education and decision-making lens. I'm Amber, and I'll be moderating these conversations. I'm joined by Nate Hall, who has over 15 years of experience in turnkey real estate investing and has helped investors buy over 2,000 doors in the turnkey space. And John Blackburn, who's been investing in real estate for over 20 years, has helped raise over $150 million for rental investments and has helped investors purchase over 2,000 long-term rentals. In this first episode, we want to start with the foundation: who we are, what we do, and why we got started. Nate, let's start there. Like, why does Turnkey Property Pros exist? What were you seeing as you were helping these real estate investing clients that made you feel like something different was needed?
Yeah, good question. There's a couple things I can speak to on this. I think first and foremost, turnkey real estate came out of a necessity for really busy individuals, right? So turnkey is designed for the engineer, the doctor, the lawyer who works extremely long hours. And not just that, we have all walks of life and professions. So this grew out of a necessity for very busy individuals who always had thoughts or dreams of doing investment real estate or being in the investment world, but they don't have the time, right? And so this grew out of a need for investors that wanted to buy investment real estate but don't have the time to rehab and build a full-fledged real estate business. So we support not only investors that are looking to get time back and diversify into real estate, but it also grew out of a need for companies that John has at Rental Property Pro. We have real estate education students that are also looking for, deals and options to invest, right? Not everybody wants to go out and rehab on their own and, talk to property managers and talk to, wholesalers. So it grew out of a necessity to get easy access to investment real estate for, all walks of life, if that makes sense.
It'd be great. Yeah. So it sounds like it was about helping people make better use of their time, right? And better
Yeah.
financial investing decisions and
Yeah.
bringing that to them. That's awesome.
Yeah.
So John, from your perspective as someone, I know you own a ton of properties all across the US. You've been through a bunch of market shifts. What kind of issues were you seeing show up on the ownership side that kind of influence turnkey property pros?
Yeah, I mean, every great business starts by solving a problem. And one of the biggest problems, like Nate had mentioned, is there's a gap. There's a gap between the knowledge and time of the investor versus investing in real estate, right? And the goal was to bring that together. And one of the biggest things that, people saw as a problem was the management piece, right? They could buy a property and they could probably do the math on if it cash flowed or not. But once they owned it, then what, right? How do we start putting this property in a place where it's cash flowing and creating income and not causing headaches for it? Because when you say the word property management out loud, the first thing that comes to your mind, the first emotion is cringe. You're like, oh, right?
Yeah.
Like that's how the word property management sounds as your inner talk, right? And our goal was to get rid of that. And the only way to do that was just, taking the time, effort, and energy that most people aren't willing or able to do, or even the knowledge to do, to interview property managers, 10, 20, 30, 40 property managers in a market to find the one that produces the actual result that most investors want. And, what were the problems that we were seeing? Lack of communication, extremely high turn rates, extremely high maintenance costs, short-term leases, everything that profited a property management team, but reduced the cash flow that the investor received. So, to boil that down, what were we seeing? We were not seeing an alignment of interests between the property manager and the investor. And what our goal was how can we align the interest? For the property manager is thinking, I want to keep this renter in the house for as long as humanly possible, sign multi-year leases, reduce maintenance costs by working with the resident to solve the issue on themselves, and so on and so forth. Not only boosting the return for the investor, but creating long-term clients for the property management team. So that's what we went out and did. We saw those problems and worked to create a solution for those problems by vetting a boatload of property managers in order to provide property managers that did what they said they were going to do, and it wasn't as cringeworthy of an experience.
That's great. So kind of what Nate was saying and what you're saying, right? Nate kind of sees the front end of like investors need properties to invest in without
Yep.
putting a ton of time. And for you, it's kind of like the long-term management sustainability of that. And that seems like it's kind of married here in Turnkey Property Pros. It's to fill in those gaps, right? And make these long-term.
Yep.
So, okay, great.
Yeah.
Exactly.
And if I could just chime in here, if you don't mind, like I
Of
think
course.
John brings up a great point is, we've done all that research for you, right? That's the whole point of Turnkey is we've taken the time to go out. Everybody wants to we'll talk about markets in later episodes, but everyone wants to ask like, what's the best investment market? I always say, well, who's the best property manager, right?
Yep.
Because at the end of the day, you can invest anywhere you want to. Where you're going to lose money is with a poor property manager, right? So we actually go out. Yes, we're in stable investment markets, but the teams that we work with and the teams that that are in these markets that we suggest are to us the best managers around, right?
I think that's a great kind of segue too, right? Why are we doing this podcast? Well, it's exactly this. These are the conversations you guys are having every day with investors one-on-one, right? Shift your focus from what's the best market to who's the best property manager, or thinking longer term about these real estate investments. And so that's really what the podcast is for, is an extension of those conversations. Let's bring this out to other people, help them get the context and education before they make any decisions, right?
100%.
Yeah. And so like you said, Nate, we're going to talk about markets in later episodes. We're going to talk about some specific strategies. But today I kind of want to hear from you guys about how do you think about real estate investing? What principles guide your decision making? How is that maybe different from some of the people you're on the phone with?
The way that I look at it, and I think for anyone who's investing in anything, right, you should create some type of guidelines for yourself, right? Some like you think about bowling, right? Bumper bowling. Hey, we keep it in between the lines to reduce any type of long-term issues, right? Because when we start investing with emotion, when we set guidelines but then invest out of them, we all know that bad things happen, right? So when it comes to rental property investing specifically, I have three pillars, and as of probably the last year and a half, I've added a fourth, right? Pillar number one is property has to cash flow from day one, right? Some investors are like, oh, in 6 months or 12 months, when I'm able to raise the rents, then I'll get cash flow. No, 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 no. Right. We're not creating a liability, we're buying an asset. So we want this to cash flow from day one. Number two is we want to buy affordable assets. And the reason I say this is because there is a guarantee when owning rental properties. It's going to be vacant, right? That is a guarantee. Renter's going to move out, go buy a house or move for work or what have you, and you're going to have to pay the mortgage payment. So we want to make that affordable for you, right? Is you're going to have to potentially come out of pocket if you're not subsidizing that with other rental income. And what would you rather have? A $900 a month principal interest tax and insurance payment, or a $6,000 a month principal interest tax? Well, obviously the $900, right? So we want to make something affordable for you. So when it is vacant, it doesn't feel like this earth-shattering event just happened. Third is buy and hold long term, right? So I always tell my investors, ask yourself this. Can you sit back and think of anyone that you know has owned a home for 20 years with the caveat of they maintained it well, right? They didn't let it fall apart. And they've owned it for 20 years and they've lost, meaning they've lost value. Absolutely not, right? No one can pick that up. I don't care what the market is. I don't care what's happened. I don't care what the economy's done. You hold a piece of real estate for 20 years and keep it in good condition, you will win. Time is our friend. It's funny to think about if we remember back to 2008, right? If you bought a house in 2008, right? And then 2010 rolled around. You were really pissed in 2010 and you bought a house in 2008. Fast forward 2026, baby. You are so pissed that you didn't buy every house you could in 2008. Remember that top of the market, right? Everything's doubled since then, right? So time is our friends. And that's just a big part of investing in really anything. Now, the fourth one, right, that I've added just because, sometimes I need to convince myself of this, but we marry the purchase price and we date our interest rates, right? In this perceived high interest rate market we're in, and the reason why I say perceived is because if you were buying houses in the 70s and 80s and early 90s, you're laughing at these interest rates saying, oh my God, they're low, right? My father had an 18% interest rate on the house that I lived in, right, when he first bought it. So, like, that's high interest. Okay. So, we marry the purchase price, we date the rate, right? So buy a house that's a quality deal, right? The cash flows that you know you're going to hold for a long time, that's affordable, right? Following the first three pillars, and know that in 6 months or a year and a half, we can always refinance into a lower rates, increase our cash flow, increase our ROI, right? Don't get so stuck on the fact that, oh my God, interest rates are 6.5. I can't pay that, right? You can fix the interest rate in the future, and the renter is technically paying for it now. So stop sweating interest rates. So from my standpoint, those are some pillars or investing guidelines that I live by.
That's great. What about you, Nate?
Yeah, I love that, John. I like how you broke it down to the pillars and took like a nice step-by-step analytical approach to this. And I'm going to kind of caveat into that and talk about, not only what principles like guide my decision making, but when I'm working with clients, what should they be looking for, right? And I think what happens to a lot of investors is they get right into this and they want to talk about bed bath combo. They want to talk about cash flow. They want to talk about best market. They want to talk about like all we call that feature benefit, right?
Yep.
Let's remember here, guys, we're not buying a used car. Like we're not, I always try to we have a saying here, take the retail cap off and put the investor cap on, right? Like we're buying something long term and we're buying something. I'm going to change the word to investing rather, right? We're investing because when we're buying, sometimes we feel like we're spending money. When we're investing, we're just changing the currency. We're going from fiat to a hard asset, right? We're taking those dollars and we're exchanging them. So the way that I look at this is what's the plan? Like, what's the strategy behind actually buying the investment property? Okay, so we had these four pillars we're trying to hit. And I like to say this to clients all the time, like actually buying the investment property is not the hardest thing in the world. Like we've got, what, John, 40, 50 doors at any given time for investors to
Hmm.
before we make that decision, let's sit down and figure out what does that look like, right? Are you an investor here on the West Coast with us that has to do a 1031 exchange and they have $1 million that they're trying to deploy? Are you a first-time investor that has, $35,000 and is scared out of their gourd to make this decision to buy a rental property 1,000 miles away? Let us sit down with you and have that plan and that strategy in place, and then we'll talk about four pillars. We're going to talk about we'll talk about profit centers, right? We'll figure out what makes sense for you, right? Because there's many conversations that John and I have had over the years where we get into the second or third conversation with you, and we might just say, "Hey, this is awesome, but this might not be for you," right?
Yep.
And so I come at it from an approach of like what kind of guides me in this investment real estate world and the turnkey world is let's talk about strategy and plan first, and then we'll implement that strategy and we'll plug in those four pillars. We'll plug in, the types of financing you want to use or how we're going to build your plan. So hopefully that makes a little bit of sense there.
Yeah, it does. I think that's a great shift, right? From as opposed to like, is this the best property or is this property great to does this fit the plan? And if
Yes.
it's the plan, great. Now let's go into those four pillars John talked about, right? Does it cash flow? Is it affordable?
Yeah.
Holding long term? Yeah, right. So I think it's a great shift. I think it's something we see a lot with beginning investors, especially like you said, it's that excitement over I want this property versus
Yeah.
does this fit the plan? And I think that's something that really sets us apart too, is that's where we start when we start with investors, right? It's let's figure out the plan first.
Yeah.
Get the
Yep.
There's too many people out there that are talking about super high ROIs and super high cash flows. Let's just bring it back for a second and be realistic. Like we're not here to knock your socks off with Bitcoin returns and high. We're talking about predictable, stable, boring, vanilla, right? We want that. In the investment real estate world, the higher the ROIs, what does that mean? The higher the risk, right?
Yeah.
So before we chase ROIs and chase cash flow return, let's sit down and actually have a conversation, right? That's what we're here for.
Yeah. And it can be funny at times, right? Because, a lot of people are looking for real estate or alternative investments for the reason that they didn't plan for retirement in the first place, right? It's like the 401k was not a plan, right? That was just a tool or a vehicle. There was no plan put in place. And now we're like shit, we're not going to be able to retire like we thought, right? And then, people are moving into the next investment, and what we are trying to do is say, hey, slow down, right? Like, planning didn't happen the first time really well. So let's plan really well now just to make sure that what we are buying or what we are investing in, as you said, Nate, is correct, right? Instead of just saying, hey, I'm going to put 10% of my paycheck in my 401k and hope to God that works out the way it should, right?
Yeah.
We're going to know that if we buy 123 Main Street and an 8, 9, 10 Main Street, right, that's getting us closer to our end result that we want,
Yeah, I
That's
love
good.
it.
That leads me into like my next question, which is what would you, I mean, obviously we just talked a bit about like investors and planning and stuff, but like people often assume we just sell properties, but what would you
Mhm.
describe what we actually do? How do we actually help our clients?
Great
Nate,
question.
you want to roll with this one,
Yeah,
man?
let me jump in here because this is my favorite part of it. Like,
Yeah.
my parents are educators, right? My dad was a professor for 41 years. My mom was a teacher for years. And so I love the education aspect, and I know John does too. And John was actually a mentor to me when I first got into real estate. I've learned more from John actually than probably most people in real estate world. So what we do, yes, ultimately, if you want to look at it as we help you buy investment real estate, of course. To me, that's the end result of what we do, right? As I said earlier in the call, like it's not super hard to go out and buy real estate. You get pre-approved, you can talk to us, you can go to a broker, you can wherever, right? What we've done is we sit down and there's two main things I think that we do, and you'll hear me say this on calls with you, right? The first thing we do is we go out and we do the research for you, like John talked about. We'll look at the market space, the GDP, the MSA. We'll look at the viability of rental market, and then we find the teams in those markets, right? We find the acquisitions team. We find the rehab team. We find the property manager, right? And by the way, anybody that we refer you to, we've known for years. Like anybody that we recommend and they're affiliates with us, we've known them for years. Like we trust our teams and our partners, right? So we do the front end research. We have the teams in place already, which takes the legwork out of it for you. And then the second thing, which I think is the most important thing really, is we're going to sit down with you and we're going to have a strategy conversation. Every investor has a little bit of a different perspective or they have a different situation. Some investors have 30 grand to start with to buy one rental property. A lot of investors have an old 401k or an IRA that they want to roll over, but they have no idea how to use a self-directed IRA or a solo 401k, right? Some investors want to use only their LLCs and have nothing in their personal names, right? So we're trying to figure out, again, what's the strategy for you? What's the plan? The byproduct of that is the rental property, right? Now, do I have calls with investors? Do I sit down with some people and they're like, I just want to look at inventory? Sure. And if that's you and you're listening to this podcast right now, great. Like we can show you properties all over the country. And if you're like more of a seasoned investor and you just want to get an inventory, great, we'll have that conversation. But I prefer, even with somebody who's more high level, just to say, hey, can we pump the brakes for a second? Let's talk about your current portfolio. What's your equity position? Are we doing any cash out refis or HELOCs, right? So a little bit of a long-winded answer, but our goal here is twofold. Find the markets, find the teams, and to put the education in place, sit down and have a conversation with us about that strategy about acquiring, right? Because not many people will do that with you, right? And again, we caveat this. We're not fiduciaries, we're not your financial advisors, so we can't advise you on how much to spend and how to do it, but we'll give you our perspective on the real estate side of it. So hopefully that makes sense.
Right. So like you said, right, it's more than just here's some properties. And
Yeah,
it's going back to that last question of like, we're helping you build a plan that is individualized to you to fit your goals.
correct.
That's what we're here for. Yeah.
Yeah.
Anything to add to that, John? Like,
Yeah, I think, for us, as you heard earlier, Nate and I have been doing this specifically in the turnkey space for 15 years, right? We basically started right around the same time. And our goal is to create long-term relationships, right? Like we're not here to, you know, sell you a house and, deuces and not talk to you again, right? Number one, because we wouldn't have been doing this for 15 years if that's, was what we were in this business to do, right? We want to make sure that you're having success and you're getting the results that we've discussed and that you're seeing the returns that you've wanted through this process. One, from a greed aspect, right? Because we want you to buy more houses because that's how we make money.
Yeah.
And number two, because we get to showcase the success that you have over the last 10 years. I remember when Nate and I started this, right? Like we would sit down and we were like, early on days, we are like, man, like it seems really good. We believe in it. Nate and I were buying the properties, but there was always this part in the back of your head that when you're just starting something, you're like, it's really going to work, right? And seven, I remember it was like around year 7, right? We had some clients that started exiting properties, right? And they were exiting properties making 100, 150, $200,000 over like what they purchased. And that's not even counting the, 8, 10, 12, 13, 14% returns that they were getting year over year, right? And we were like, holy shit, it worked great, right? So, it's a tried and true process at this point. We've seen it work. We've gone from entry to exit to 1031 exchange to reinvestment, collating and tracking all the KPIs and returns. So there's a lot of data behind, what we share and what we say.
That's right. You touched on a point about kind of like transparency, right? About what we're doing, the data we have. Nate, you talked a little about what makes us different as far as like the education, the plan building side. As a company, what makes us different? There's a lot of real estate podcasts out there as well. In addition to real estate companies, there's a lot of podcasts. What do you guys think is going to make this podcast different from what other people might be hearing?
Great question. For me, it's what we just talked about. It's the education aspect we bring. Like we're going to bring a bunch of content and understanding, lenders, LLC specialists will highlight our partners in those markets, right? I think for us, the difference is really the time, the energy we're going to give you as, educators. Again, real estate's real estate. If you want to buy real estate, we can support you with that too. But I think that the difference with us is just bringing the content and the education that we're going to bring you. That's pretty clear cut. So,
yeah. I mean, outside of the pure enjoyments of riding in your car or standing in the shower and getting to listen to Nate and I would say, you know, there are very few podcasts, and trust me, because I've listened to all of them, where there's, 35, 40 years of experience between the two individuals on there, right? And I like being, I know Nate is the same way, extremely real with what's going on in the markets, with what is actually happening, right? As I said before, we're not here to sell you anything. If you wind up working with us and investing, amazing, right? You're getting as much benefit as we are, right? You're getting a kick-ass investment that's going to give you returns for the next 10 or 15 years, right? So we all benefit in that transaction, right? But at the end of the day, we want to educate you, because in addition to being a boatload of podcasts out there are a boatload of turnkey companies out there. And what I want you to do is I want you to shit test every single one of them. So take the information that we're giving you and use that against them, right? In the sense of like, are they telling you what's true, right? Do those things stack up? Does all of what they're saying make sense, right? Because we were that baseline for you. And so if you're looking to get into turnkey investment real estate, use this as your education platform to shit test everyone else you talk to in the industry who's trying to sell you properties. That's the easiest and best way to do it.
yeah, I love that, man. I love that. And one of the things that just popped into my head is like, we're not going to give you a bunch of fluff, right? Like this isn't about super high Section 8 returns and like buying something that is unrealistic and unreasonable, right?
Yeah.
We're going to be very transparent and realistic about what the heck is going on, right? I can't tell you how many people I talk to that have talked to other groups or listen to other podcasts, and it's very unrealistic, right? What's
So unrealistic.
doable out there, right?
Yeah. And I just, sorry to interrupt you, Ann, but just because
Oh, no.
you and I talk about this probably 3 times a week, right? We get on a call with someone and someone's like, I just talked to someone, they're going to give me an 18% cash on cash return. And like, there's a difference between what is called actual and paper returns,
Yeah.
right? Actual returns is what you actually get, and paper returns is what that piece of paper says that you should get, right? And normally when it's too good to be true, it is, and or it also showcases the risk involved, right? If I say, Nate, we're going to go invest in Microsoft, and Microsoft or Dell or General Electric or Berkshire Hathaway, and they're going to give us an 8% return. You're going to be like, oh, well, that's fair because they're so low risk companies, right? And then if I say, hey, Nate, we're going to go get an investment where you're going to get 20% return. What do you instantly think about that investment from like a stock standpoint? You
Yeah,
instantly think that's high risk, right?
correct.
Well, just because there's a house involved, just because you can touch and feel this thing and go kick the door and like it's there and it's real, doesn't mean that return and risk ratio are any different than stocks or bonds or mutual funds or any other type of investment you have, right? The higher return you see on paper, the higher risk it is, right? So, you know, you can make that decision. That's your right as an investor. Just don't compare, penny stocks to Microsoft, right? That's never going to get you anywhere, right? Your penny stocks, yeah, you might wind up being a millionaire in 36 hours. You might also wind up being broke, right? So, whereas Microsoft, you're not going to be a millionaire in 36 hours, but in 15 years you will be. Are you willing to wait? Right. So, because I get tired of answering that same question over and over again.
Yes, exactly. I'm glad you hit that on the head because when we talk about, and we're obviously going to do other episodes on like returns and things like that, but when we talk about, a turnkey investment, we're going back to that vanilla, predictable asset, right? And if it makes you 8%, awesome. If it makes you 12%, great. And that's one profit center if we're talking about cash on cash return, right? So, we're going to get very realistic on returns and expectations and things like that moving forward because everyone wants to talk about that. But let's plan build too, right? So sorry, Amber, we're
We're
No.
talking over you.
tangenting. Yeah.
Feel free to kick us out anytime.
No, I think it's great. I think you guys make a good point, right? There's kind of like a shiny object syndrome, especially
Mhm.
now, right? You see
Yeah.
these ads. I mean, I get them too, like Section 8 rental, 18% return, and you're like, oh man, that's amazing. Let me go do that. And it's that enticement and that draw,
Yeah,
especially as a beginning investor who maybe doesn't really know all the ins and outs of real estate investing. Those things can look really good or sound really good. And it's hard to not want to jump into them, but you don't really realize the risk that you're taking on.
Exactly.
So I'm actually kind of curious from your guys. I mean, we've talked about a lot of stuff today, right? About plan building, about four pillars, long-term mindset, investor mindset, this not getting caught up, paper returns versus real returns. Um, for somebody who's maybe listening that is like me, right? A beginning investor, somebody who's just getting started in this, figuring out their next step, like what's the one thing you would want them to walk away today, walk away from this podcast and take with them? Like, what's the number one thing?
it's a great question.
That's a good one.
I'm gonna do this here.
Do it.
Um, John, you want to go first? Or you want me to chime in
I
after
knew
that?
it. I knew it. I was
No,
going to,
let me go.
the
I'll
pass
go.
off.
Hey,
All right.
we're on a
All right.
podcast. See, it's all good. I'll beat you to it. Um, I want you to be really honest with a question. If I'm Amber, if I'm talking to you and you're an investor and a potential client of ours, I want you to be really honest with yourself. Especially if you're thinking about turnkey investing. If you want to walk away with something, ask yourself the question: is investment real estate, particularly if it's out of state, is that something I can be in alignment with and learn about? Right? Can I own something out of my backyard, right? Because we're talking about most of the stuff we do, and 99% of our investors invest out of state. And that's the first thing is like, can I get in alignment? Am I comfortable getting on the phones and having this conversation? Is it pie in the sky for me? Am I just listening to this podcast and, you know, hoping to get more education, hoping I can do this, or is it something I really want to take action on, right? So, be honest with yourself as an investor. Is it something that you really want to take a look at? And we'll educate you. So,
That's great. Yeah, because I think a lot of times I see this a lot too. I'm guilty of this as well as kind of that information farming, right? It's
yep,
really easy to go on and look at all these different things and you get ads and you click on this and I want this resource and this ebook, but taking the actual step and taking
yeah,
that action is a very different thing. And it's a good point, Nate. Like have a real talk with yourself. Am I really ready to do
yeah,
this?
yeah,
It's great.
Love that, man. That's great. I mean, from my standpoint, If you're an investor listening to this, you're likely brand new to investing, right? Like you're educating yourself. And number two, like maybe you've bought one or two properties and it's time to go to the next level, right? So I would ask myself, am I ready to be accountable for my financial future, right? Because you're coming into this educating yourself, you're coming into this, spending money potentially if you invest with us or someone else, right? You're taking accountability of your own financial future, which historically for 99.9% of the United States is not true, right? Like that's, we just plow money into a 401k, right? And through that process, things have not turned out so well. So here, we're going to hold you accountable to taking action, right? To watching videos and getting educated, to talking to lenders to find your best interest rate, to reviewing and analyzing properties with us, right? We're going to ask you to put in work versus just blindly handing out some of your paycheck to an account, right? And we want you to be prepped for that, right? It's going to be fun. It's going to be exciting. Nate and I, as fun as spreadsheets can be, Nate and I, do our best to make it a really awesome process to go from I don't know what the hell I'm doing to collecting your first rent check, right? But it's going to take some participation and accountability on your end. And do you have the 4, 5, 6 hours that it's going to take to knock that out over the course of a month or so? So if so, and you're good on making decisions, then that's the takeaway there.
Yeah, and you bring up such a good point, John, of taking action and accountability. It actually does kind of blow my mind how many people I work with where we send them materials, we send them a
Yeah.
recent webinar, we send them a recent recording, and nobody watches it, right? We're literally giving you, information that 99% of real estate or potential wannabe real estate investors don't know, right? So
Yeah.
we will hold your feet to the fire sometimes and say, hey, did you watch this material? Do you know what we're talking about today? Nope. Okay. Well, maybe we reschedule the call and we go back after you've watched the materials so you have some questions for me on this phone because we want to respect our time, but we also want to respect your time, right?
Yeah.
Like come prepared, come educated. If we ask you to watch 2 or 3 episodes of a podcast to get your education process started, why would you not do that? Like if you're
Yeah.
literally thinking about investing 25 to $40,000 in a piece of real estate, why would you not take an hour of time to review some materials to get yourself prepped for doing that? It kind of blows my mind, right? And this is a podcast, so you can be a little bit more real on here. Take the time to be accountable for what you're doing, right? So yeah, I love that, John. That's a good takeaway for sure.
Yeah, I love that both of you actually hit on like, the takeaway from this isn't go figure out what market you want to invest in, go get your money together, get ready. It's like this is about personal accountability. Take
Yeah.
a step back,
Yeah.
be real with yourself. Am I ready to do that? Like, where am I at? Right. And I just think that's also like, I feel like what we were talking about earlier, what makes us so unique, right? Is we're not going to try to shove properties down your throat. We're not here to sell you
Correct.
some big pipe dream. It's really about like, is this a good fit for you and are you ready? And we'll help get you there. We'll hold your hand. We'll give you the education. We'll do what we can. But at the end of the day, like you have to be the one to make that decision yourself. And I just think it's
Correct.
interesting that both of you hit on that in different ways of like that personal accountability and that mindset piece being the most important takeaway. So really appreciate
Yes.
that.
That's huge.
Yeah. Well, thank you guys so much. It was a great conversation. I think it's a good intro into kind of who we are, why we're here, what we're doing as Turnkey Property Pros and as part of this podcast. In the next episode, we're actually going to start breaking down a little bit about how turnkey investing companies, the people who send you properties, how that compares to other strategies when it makes sense and what kind of where we fit into all of that. So thank you both so much for your time today, and we look forward to seeing you next episode.
Yeah, thanks,
See you
everyone.
guys. Thank you
Cheers.
for listening.